All right, let's talk about TotalEnergies. Their latest financial results are, well, they're a bit of a puzzle. Oil prices took a nosedive, but somehow their profits just didn't. So we're going to dig in and figure out exactly how they managed that.
So yeah, TotalEnergies, one of the absolute giants in the energy world, dropped a report that had a lot of people scratching their heads. It just seemed to fly in the face of what should have happened in the market.
And you don't have to take my word for it. Just listen to their CEO, Patrick Pouyanné. He basically says, hey, oil prices dropped by $10 a barrel, but our net income, it stayed exactly the same as last year, a cool $4 billion. I mean, that's not supposed to happen, is it? So let's just lay it out. Super simple. The price of the main thing they sell goes down a lot, but the money they make stays flat. It doesn't even blink. How on earth is that possible?
That's the big question, right? How did they manage to defy gravity here? Well, that's what we're going to unpack because the answer really shows off a super smart and pretty powerful strategy. Okay, so part one of the answer really comes down to their bread and butter. We're talking about their core oil and gas business. And the strategy here is pretty straightforward, right? It's like if you're selling lemonade and the price you can charge drops, well, you'd better sell a lot more lemonade. And that is exactly what TotalEnergies did. They bumped up their production by a solid 4% compared to this time last year. And that extra volume, it was absolutely crucial. It helped plug the hole that those lower prices were creating. Now, this didn't just happen by magic. They were actively bringing huge new projects on stream. We're talking about new fields in Angola and a big LNG expansion over in Texas. They were really firing on all cylinders. But believe it or not, that's only the first piece of the puzzle. All right, let's move on to the second piece, and this one is a really big deal. It's what I'd call the downstream surprise. And just so we're all on the same page, what do we mean by downstream? Basically, it's everything that happens after the crude oil is pulled out of the ground. Think refining it into gasoline, marketing it, the gas stations, all that stuff that turns raw crude into something you can actually use. Okay, so this quarter, their downstream business wasn't just another part of the company, it was like a secret weapon. It acted as this incredible financial shock absorber. Because weirdly enough, when the price of crude oil goes down, it can actually become more profitable to refine it. And that created this amazing buffer against the low prices. And I mean, just look at these numbers. They're wild. The income from this part of the business jumped from $600 million last year to $1.1 billion this year. They almost doubled it. This wasn't just a nice little boost. This was an absolute game changer for their bottom line. So why the huge jump? Well, it was kind of a case of being in the right place at the right time. Their European refineries were running smoothly, and they were perfectly set up to take advantage of these better profit margins, basically buying crude cheap and selling the refined products for a great price. But wait, there's more. It wasn't all just about the traditional oil business. There's a third, really important part to this story, and it's all about where the company is headed in the future. Let's talk about their integrated power division. And this is so much bigger than just getting through one tough quarter. What we're seeing is a major strategic shift. TotalEnergies is making a huge push into generating electricity, and a big chunk of that is coming from renewables. And to give you an idea of how serious they are, by the end of the quarter, they had over 32 gigawatts of renewable power capacity. I mean, that is a ton of power. But what's even crazier is the speed they're moving at. They added more than 8 gigawatts of that in just the last year. That pace is just incredible, and it really shows you this isn't some side hobby for them. They are all in on this. So what's the takeaway here? It's a very clear, very deliberate strategy to build a company that doesn't live or die by the price of oil. It's all about building in resilience for the long haul. Okay, so let's pull all these threads together now and look at the big picture, because what this all adds up to is a really impressive balancing act. Remember that puzzle we started with, how they made so much money when oil prices were down? Well, the answer is something they call their integrated model. And this integrated model is basically the three things we just talked about. 1, sell more oil and gas to make up for lower prices. 2, let your downstream business cash in on those lower prices and make better profits. And 3, keep building that power business as a totally separate engine for growth. It's a brilliant setup, really. When one part of the company is fighting against a headwind, like low oil prices, another part is designed to catch a tailwind from that very same thing.
That's how they've built a business that can handle these kinds of market storms. But, and there's always a but, even their own report points to some uncertainty ahead. There's a lot of oil supply out there, which could keep prices low for a while. So the big question is, can this amazing balancing act keep working? For now, we'll just have to wait and see.